Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. Like the name suggests, this show gets you actionable insight into everything mutual fund related. So if you've got to make an investment or if you have to manage your portfolio, the insights that you get on this show will help you do just that. Now, we've spoken about a variety of topics over the course of the last several weeks, but today I thought we should focus on thematic and sectoral funds. Because, believe it or not, this is a section of actively managed equity mutual fund schemes that is now the second largest in terms of assets under management. It is something that offers you the opportunity to invest in varied themes, not least of which healthcare, as well as pharma, as well as banking, IT, you name it. Most recently, however, there is a manufacturing theme that has emerged, and one particular fund house has decided to capitalize on the opportunity that India presents. Should you invest in any of these themes? That's the question that we're asking Vijai Mantri, the co-founder and Chief Investment Strategist at JRL Money. Vijay, thanks so much for taking the time, and pleasure having you in studio.
Same here. Thank you very much.
And, so it's an interesting topic. I think it's more interesting because a lot of financial planners, a lot of advisors that I have spoken to over the years, Vijay, are quite strong in the statement that they make, that not everyone understands thematic funds, as a result of which they should be cautious about thematic funds, and they should restrict their allocation to thematic and sectoral funds to 10% of their equity allocation. Do you believe that that is true, and if not, why?
So if the client do not understand, then it's the job of mutual fund distributor, stock advisor to make client understand. Because globally, a client move toward the asset category which delivered the highest return. And within that particular asset category, which are the top stocks, which are the top themes, which has done exceedingly well. So it is a natural phenomena. And if you look at numbers, so what you're saying is absolutely right. Today, after FlexiCap, thematic and sectoral fund became the highest. But what is very interesting to see is the number. You have to look at the number pre-COVID and post-COVID.
Okay.
Because there's a dramatic difference between pre-COVID and post-COVID. And then we figure out why people are doing the way they are behaving. So if you look at pre-COVID era, the total AUM of these funds was like 2 to 4% of total equity AUM.
Interesting.
Today it has become 12%. If you look at total inflows, they used to account for 4 to 8% of inflows. Increasingly, year after year, the inflows in these funds are increasing. So in 21, 22, maybe 20%, 22, 23, 30%. But this financial year, only 2 months has gone, is almost 40 to 50% kind of numbers are coming into thematic fund.
I want to, in fact, ask my producer to pull up the line chart that we've set up, because that is exactly what Vijay is speaking about right now. Thematic funds assets under management as a percentage of the overall actively managed equity. And it has risen quite dramatically. What we've pulled up, of course, is over the last 1 year or so. But that should give a picture. See, what is on the screen right now is the assets under management. But as a percentage of actively managed funds as well, it is a line graph that is going through.
And actually, if you look at pre-COVID, the numbers are very poor. But if you, immediately after the post-COVID, and if you see the reason why it is happening, because I did an analysis in November 2023, where I looked at last 10-year net buying of individual stocks in the by individual NSE stocks. So we figure out that in 10-year period ending on November 2023, 80,000 crore has gone into net buying.
Sure.
But in mutual fund, 16 lakh crore has gone. So 20 times more.
Wow.
So what is happening is that post-COVID, and because of technology and adoption of technology, people have figured out that they don't need to do buy direct stocks buying, and perhaps they can play with the sectoral fund. And whatever the itch they had to do some speculation, that is actually moved toward F&O. So people are doing F&O activities separately. In investing, large sum of money is still going into actively managed normal fund. But the itch to own direct stocks, that has come down, but is to play through sectoral fund, and actually gone up.
Because there is an aspect of understanding that this particular sector is going to do well.
Yes.
And so there is an aspect of direct, not exactly, but if you know that banking, for example, and we've spoken about it often on the market shows on this platform itself, there are a few private banks, even right now, Vijay, that are undervalued. And some might say it's a good opportunity to buy a banking fund.
Absolutely. So if you look at, so for instance, just look at 1 year data. If you look at large cap, it delivered 34% return, category average.
Yeah.
Very interestingly, high beta indices have done much better, and low beta indices has done much worse. So let's take large cap as a say average. So MNC fund, IT fund, consumption fund, all these bank BFSI, all these low beta fund has actually underperformed even Nifty. What has outperformed is small mid cap, but what has done remarkably well is defense fund, is PSU fund, and infra fund. And I would like to tell you a story. It's very, very interesting. HDFC launched a defense fund a year back.
Yes.
Okay. A lot of my clients asked me, and I said that, yaar, humko to theek nahi lagta because the number of stocks available to invest are very few.
Yes.
And even if you look at composition of HDFC defense fund today, the number one holding is Hindustan Aeronautics, which is 20%. Number two is Bharat Electronics, which is 18 to 19%.
Yes.
So two stocks are 40% of the portfolio, and top 10 stocks are 80% of the portfolio.
Wow.
Now, if these stock does well, then the fund will deliver absolutely good return. So what has happened in last 1 year? HDFC Index Fund NAV has doubled. So anybody who has invested, they got in 1 year return which ideally you would have got in 5 year period. So if that is the kind of performance, like PSU is 90%, infra is 80% plus. So if you look at, if these kind of performance are there, then it is very difficult to hold back investor, and people, and this trend become much more evident post assembly election result. People felt that Modi is going to come back. If Modi is going to come back, which are the sector which will do exceedingly well? So manufacturing, infra, PSUs, defense, railways, and we have seen huge rally in these sectors.
So let's do this. Let's break down the pros and the cons, because for every product, I am absolutely certain that there are pros and cons. So let's weigh the two, but let's focus on the advantages first. If I remember correctly, infrastructure is one of the themes in FY24 that did incredibly well. And by far and away, there is one particular thematic fund that has done incredibly well. So generally, what I have witnessed, and correct me if I'm wrong, because you are a student of data much more than I am, in any given year, would it be okay to assume that there is one thematic or sectoral fund that will be the top performer?
Yes, of course, because this is the way the active fund outperform, because they take sectoral call, they take a stocks call. So this is bound to happen in a particular period. If a particular fund is overweight on healthcare and healthcare has done well, then naturally that fund would do very well. So I tell you, one need to differentiate between thematic and sectoral fund. Okay. Sectoral fund invests in a particular sector. And by and large, sectoral fund, by definition, are very concentrated.
Yes.
So even you look at BFSI or you look at IT top 10 stock.
Or pharma.
Pharma, top 5-6 stock would be like 80% of the portfolio. So these are not typical thematic fund. And within thematic fund, you need to figure out whether this theme is going to play it out for a pretty long period of time. So for instance, FMCG is considered to be the safe bet, because in volatile market, FMCG consumption fund will do very well because you have great companies in that. But the counter to that is that pharma is new FMCG because you have 23 crore people above 55 years of age. We are going for more tests. So it is just not drug manufacturing company today.
It's diagnostics
we have diagnostic,
as well.
specialty hospital, we have API, we have contract manufacturing, we have biosimilar, we have so many things. So if you look at the total basket available to actively manage, to fund manager, there are 80-90 stocks available in pharma and pharma related sector. Even health insurance companies are also part of the whole ecosystem.
So, but to that point, is it a pharma fund or is it a healthcare fund?
So nobody today call themselves
a pharma
pure
fund.
pharma fund. They call themselves healthcare fund. And incrementally, what we are seeing, the people are spending more and more on healthcare. If you look at 5-6 years back and look at the numbers today, all more than double the number we are spending on healthcare. So wherever people are spending money, that sector would do well. So if you ask me, healthcare, in my opinion, is not a risky theme. In my opinion, healthcare is a great theme to do SIP for the long term. And if you look at 10 to 15-year numbers of healthcare fund, they are underperforming Nifty. So healthcare is not that risky a category. Second is BFSI. Now, earlier BFSI means banking.
Right.
Today, just not banking. You have within bank, you have public sector, private sector, you have a fintech, you have a
Insurance.
Insurance, you have life, general, health.
Yeah.
You have a stock exchange, you have RTA, you have a custody, you have a gold
Brokerages.
finance company, your housing finance company, your personal loan company.
Yeah.
So there are more than 100 stocks available
Yeah.
for you to own. And remember one thing, by and large, the corporate governance in all the BFSI is very good because it's been either regulated by SEBI, IRDA,
Or
or
RBI.
RBI.
Yeah.
So the kind of things we see promoted doing all the
Golmaal, yeah.
Golmaal is, we haven't heard too much into that aspect.
So the question then is, and you've made this important segregation within thematic and sectoral funds, because I think one of the concerns, and to the first question, right, is that there is a concentrated bet usually in sectoral funds, but you're saying that that does not necessarily exist with thematic funds.
Absolutely.
And so that is the first and most important distinction to make.
Absolutely. And if you see the number, you will see the number. The more money is coming in thematic than coming in sectoral.
Okay. Do you have,
No, I don't have data, but we know what our customers are doing. And third, suppose you look at manufacturing. It's a very, very interesting theme.
Right.
So, for instance, let's look at HDFC Manufacturing
Yes.
Fund. Why it collected 10,000 crore rupees? Definitely, the leadership of Navneet and his has made a lot of difference. He energized the whole team. These are different things altogether. But why it worked? Okay. So, for instance, you have Flexi Cap Fund. So, whether you would like to invest in large cap, small cap, mid cap, whatever, but if you invest in one Flexi Cap or few Flexi Cap, I think you address most the market cap cycle. Manufacturing does same thing for you. Would you like to play PSU, railway, infra, cap goods?
Even pharma for that matter.
Pharma. So all make in India, auto, energy, power. If you look at all these things, manufacturing would play a very important role.
There are 73 stocks in that fund.
Right now 73, but total investable universe is more than 600.
Right.
So it is not a very concentrated kind of thing like in defense or PSUC, which is basically a single shareholders government of India. So it is not like that. It is much more diverse in revenue pool, from ownership perspective, from the way policies impact these stocks. So very, very different. But one of the most fundamental reason why I believe manufacturing is a great idea, whether somebody would like to own or not is completely their call. They need to consult with their advisor. But why I believe manufacturing is a great call, because it's just not PLI or cheap labor or whatever it is. I think one of the most fundamental factor is not being highlighted enough is electricity. So if you look at Vietnam is telling Foxconn to reduce electricity consumption.
Yes.
Now, in my opinion, only 3 countries in the world we can produce electricity in large quantity. One is USA, second is India, and third is China.
Yeah.
So, in India, and as far as nuclear power is concerned, we are the second most competitive. So it is, in my opinion, a mega trend. It is just not a theme for a 1 to 2 months.
So according to you, it's not an issue of policy necessarily, and while that benefit is there,
absolutely,
it is an issue of scalability.
Absolutely.
More than anything else.
Absolutely.
But let's talk about this HDFC fund in a little more detail, because I think given the kind of interest there has been, there will likely be a lot of interest going forward as well. More than any other sectoral and thematic fund in that category, would you say that this is something that stands alone? Because I was looking at the composition of the scheme so far, and of course it is going to develop. 85% of cash received has been deployed so far, so 15% cash or thereabouts. 80% is large cap. The largest holding, Mahindra & Mahindra, 4%. And that will, of course, also change as they invest more. But that is telling in and of itself.
Yeah, that's very true. But that is with the manufacturing because it's not a sectoral fund. But if you look at most other thematic or sectoral fund, you have large cap only 60%. And perhaps the current valuation in a small cap is also playing in the mind of a fund manager. Suppose you look at manufacturing theme, the smaller company has grown too fast and the valuations are at very high level. So perhaps that is playing in fund managers' mind. But to cut the long story short, I believe BFSI, consumption, healthcare, whatever name you call it, and manufacturing are mega thing.
We've spoken about some of the themes that you like, and we've even spoken about a very interesting new fund that has come into the market. We spoke at the start that 10% threshold that a lot of people speak about. There's a reason why they talk about it, and that's because they want to caution people against concentration. But you've also pointed out that concentration is not something that is seen across the board. Take, for example, the manufacturing
absolutely.
fund. So then, from that perspective, if it's not 10%, then can you simply use thematic funds to make a diversified portfolio?
Yeah, you can absolutely do that. And for instance, the best way to look at thematic fund or sectoral fund is to invest when they are generating negative return.
Okay.
But unfortunately, in this market, no segment is generating negative return. So you
so
look
it's
at
tough to do.
It's absolutely, you find which is relatively undervalued or has that not even. I don't think there's anything called undervalued in this market.
Right.
So anything which is not done as well as people expected them to do well. So BFSI is one segment.
Yeah.
If you look at 10, 15-year return, they are sub-nifty return.
Yeah.
If you look at large cap, sub-nifty return.
Yeah.
If you look at pharma, it is much below that. And manufacturing, I believe, is going. When you look at manufacturing, see, generally what happened whenever we try to understand the market, we look at the history, how historically market has performed. But when tectonic shifts are being made, when the history is being created, then looking at history, you become slave of history.
Yes.
So I think in manufacturing, we are entering, in my opinion, a new era. So perhaps customer can look at around 5% allocation into manufacturing.
Sure.
Around 5% allocation, they can look at healthcare and BFSI. Around 5% allocation, they can look at consumption. And all four segments are, except manufacturing, are not high beta segment.
Yeah.
And the rest of the market you can play through flexi, small cap, mid cap.
Let me reiterate that just to be absolutely clear. 5% in manufacturing, 5% in consumption, 5% in healthcare, and 5% in BFSI.
BFSI, yeah.
Okay, so these are the four pillars that you're saying can be part. So we're still at 20%.
Yeah.
What do we do with the remainder?
I think most of that money need to go into flexi and large cap in this market.
Okay.
Okay. When the market, 3 months, 6 months down the line, I don't know what will happen. But in the current market, my maximum allocation is going into large cap, flexi cap, and these four segments of the market.
Okay. Now, when it comes to the selection of schemes, in the manufacturing space, there is only one scheme.
There's one more. There's one Birla scheme available.
Okay. So there are two. But so would you say you divide it into both?
No, I would look at right now HDFC because the team is large and they have 4 or 5 fund managers with different kind of investing style, and all of them have done a very good job. So right now I'll focus more on HDFC in manufacturing.
Okay.
In BFSI you have Nippon, one of the oldest. You have ICICI. You have Invesco, which has done exceedingly well. You have HDFC. You have 5-6 funds are available.
Sure.
Nippon I think one of the oldest. So you have Nippon. You can pick Nippon, White Oak, HDFC. All these, the 5-6 names which I gave.
In healthcare?
In healthcare, I think one of the outstanding fund, which in my opinion has completed more than 15 years and delivered 20% CAGR, is Nippon Pharma.
Right.
So that fund is very good fund. White Oak also a very good healthcare fund. HDFC has a healthcare fund. iPro have a healthcare fund. So investor could look at these 4 or 5 funds.
And the last was consumption.
Consumption, you have ICICI Bharat Consumption Fund, you have Tata Consumer Fund, you have HDFC Consumption Fund. You could look at these funds. But very interestingly, auto and PSU, I started investing my own money in customers' money in 2020, 2021. And 2024, I gave a call to my investor. I'm not allocating new money. And perhaps whatever you have, I'm taking money out systematically to move to large cap.
Okay.
So this I did with whosoever is invested.
So what you're saying is auto. So would it be fair to say that with the manufacturing fund now coming through, instead of putting purely in auto, you can actually put it in
you don't need to chase PSUs, railways, infra.
It's all available.
Is manufacturing. So, and let fund manager decide where they see more value.
Yeah. Okay, so that's a fair point. And in your opinion, of course, this is something that depends on risk taking ability as well. But obviously, because of the markets and the way that they've performed over a period of time, especially post-COVID, the tilt has become more towards equity than it is towards fixed income, but a balanced portfolio requires fixed income as well.
Today, nobody wants to talk. Unfortunately, nobody wants to talk about fixed income.
But do you think it should be there?
It should be part of every client's portfolio.
But how much?
It has to see. People have a different statistics. Someone would say 100 minus wage and all kind of thing. I have a very simple formula.
Yeah.
Whatever are your household expenses for next 3 to 5 years,
Yeah.
they need to be kept in debt.
Okay.
And on that, don't chase return.
Okay.
That has to be an absolutely lowest risk product.
Capital protection.
Capital 3 to 5 year current purchasing power protection, not future purchasing power protection. Rest of the money you need to think of investing in equity, but keep in mind, invest that much money on which you are willing to take 20 to 30% temporary downside.
Okay.
Then only invest that money. If you don't have that, then look at equity saving fund, hybrid fund, and then put the rest of the money. But whatever money you are putting in equities, please keep one thing very, very clear. 20% downside is possible any day, temporary.
Yeah.
You should not bother about it.
And use those opportunities.
Absolutely.
I want to very quickly take a couple of questions if we have the time. The first one I'm taking is Astha. She says she's 25 years old. She's asking, is it a good idea to invest in the SBI Automotive Opportunities Fund and the SBI Consumption Opportunities Fund? She wants to invest a total of 10,000 per month. You've already spoken about the automotive fund.
Yeah.
So therefore,
as a consumption is a better idea.
Okay. So should she go ahead and do consumption?
That she need to consult her financial advisor. But between both these two funds, I think consumption to me looks.
And if she follows the asset allocation strategy that you were talking about, instead of automotive, would you suggest the manufacturing?
Manufacturing is a better idea.
Okay. The next one is Saurabh Kumar. His age is 26. I'm glad that we have a lot of young investors tuning in. I want to seize the global AI opportunity, is what he says. Would you prefer any partial fund of fund, particular fund of fund, or should I go for the Mirai Asset NYSE FANG plus ETF?
So the 2-3 things one need to keep in mind is ETF. There's a big difference between NAV and ETF price. The NAV price I looked at few days back, 76, 77 rupees, and NAV was 92 rupees. So 24% premium you pay when you buy ETF. The second is taxation. It is taxed like FD.
Right.
And third, if you look at this fund's composition, 10 stock is 100% of the portfolio.
Right.
We have Apple, Alphabet, Microsoft, Tesla, NVIDIA, all these ideas. So, and in spite of all that, if you look at performance of last 5 years, it double your money.
Yeah.
Which is like.
But the question is, should you do that right now, Vijay?
No, I don't think so. I think there are better opportunities available in India.
Yeah.
So, for instance, if I have to look at investing in India, if I have to go in sectoral, I will go BFSI, healthcare, manufacturing, consumption.
Okay, very quick last question. Sandhya Nagarajan, again, 25 years old. She's looking for 1 crore returns. I want to save 1 crore over the next 5 years. What should be my SIP amount, and can you suggest a few funds?
1,25,000 rupees per month. Let's assume 12% X IRR. If she's lucky, she get more.
Yes.
Then start with, see what is in her hand is amount she can invest.
Yeah.
So 1,25,000 rupees per month.
Yeah.
And my recommendation is that 20% you can look at sectoral, but 80% has to be in large cap, flexi cap.
So if you do not have 1,25,000, which most people don't have, and at 25, unless Sandhya is doing an incredible job or has a business that's doing incredibly well, or is freelancing and earning a lot of money, she doesn't have that. What should she do?
So then how does one if in 5 years want to get to 1 crore?
Seems like an arbitrary number. Should she push that forward, Vijay?
Yeah, she can put it forward, but I think, see, look at other way around. If you want a peaceful retirement, 20% of your household expenses, suppose you put an equity mutual fund for 20 years, you're sorted, 25 to 30, you're sorted in life.
Yeah.
And suppose you increase it to 30%, 40%, you're sorted in life. But many people don't have that kind of patience to hold equity. So many Indian comes and tell you gold is great, real estate is great. It is great because, not because of the asset category.
Because you can't sell it.
Because it's holding period.
Yeah.
They held it for generation.
Yes.
That's why they're saying 1 lakh ka zameen 10 crore ho gaya.
Yes.
Now in mutual fund, like we discussed, a worst equity mutual fund in 30 years multiplied your wealth 45 times.
Which is incredible. Vijay, thank you so much for joining us in studio. Unfortunately, we're out of time. I could keep talking to Vijay, but well, we're completely out of time. It's been an absolute pleasure bringing you the Mutual Fund Show. Let us know what you think on any of the comment section, or in fact on that WhatsApp number that should flash on your screen. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.